Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news of $100 a barrel plus oil price that is settling in as the Persian Gulf conflict itself settles in to an attritional conflict with no end in sight. And although he apparently sees no irony in it, US President Trump has called for help from other countries to dig him out of the crisis he started by sending naval forces to keep the Strait of Hormuz open and safe. But so far, no country has stepped forward with any commitment. Elsewhere, there'll be a lot going on in the week ahead. The big economic event will be the US Fed's decision on Thursday. This is supposed to be Chairman Powell's second last meeting, where he is the boss, and no change is anticipated in that rate. But Trump has been losing court fights over his campaign to oust Powell, and Congress won't progress Kevin Walsh's nomination. So who knows where that'll all play out. Central bank decisions will also come this week from Canada, where no change is expected, and none from any of Sweden, Switzerland, the ECB, Japan, China, or England. For all of them, it's a wait-and-see situation. Russia will review as well and may cut by 50 basis points. Of course, locally, the big one will be the RBA's cash rate target review tomorrow, and markets are now expecting a 25 basis points hike. For economic data, all eyes will be on the New Zealand fourth quarter GDP outcome and probably more importantly, the Aussie labour market report for February. And there will be key releases from the US for PPI and industrial production. The Eurozone will release its trade balance data, and the Canadian inflation rate will be released. Additionally, China will release its industrial production, retail sales, unemployment rate, housing prices, and fixed asset investment data, many of them later today. And back in the US, it'll be no surprise to learn that core PCE inflation rose at a 3.1% rate in January, its most since late 2023. And the rises in December and January were at more than a 4.5% annualized rate. Given subsequent events, it seems unlikely this rate will have eased since. And the rising inflation threat will be the main reason the Fed won't cut. In its second interim report, US economy expanded at an annualized 0.7% rate in the fourth quarter of 2025, far less than the 1.4% advance estimate, and the weakest performance since the contraction in the first quarter of 2025. Downward revisions came for exports, consumer spending, government spending, and investment. Imports decreased less than previously thought. It's turning out economic expansion is far less now than at any time during the Biden presidency. And the January JOLTS report showed more openings than in the 5-year low December report, but these were still 6% lower than a year ago. Meanwhile, the widely watched University of Michigan Sentiment Survey fell as expected in its March edition to a 3-month low, but inflation expectations didn't fall as expected. The shifts were comprehensive across all income and age groups. War uncertainty and the rising fuel costs were the obvious triggers. Those petrol prices are up 18% now from a year ago, up 9% in a week. The darker mood is very obvious from 2 years ago, with sentiment down 30%. Meanwhile, the Congressional Budget Office is sounding the alarm about where the US federal debt is tracking. Page 3 of their February report shows the essential corruption. Personal income taxes are up 10%, and you can be sure none of those relate to billionaire taxpayers. Corporate income taxes are down 33%. Even the tariff tax collections are essentially taxes on Americans collected at the border. These are up $109 billion, about the same as the rise in personal income taxes. The result seems to be that the US Treasury debt held by the public is currently 101% of nominal GDP, and without changes, it'll rise to 175% of GDP in 30 years. In Canada, their labour market shrank in February, and by an outsized 84,000, following a 25,000 decrease in January, and sharply missing forecasts for a 10,000 gain. Job losses were concentrated in full-time positions, where they were down 108,000, so the report is grimmer than it first seems. It has been called a brutal jobs report and will undoubtedly end the Bank of Canada's hiking cycle. India's loan growth rose 14.5% in February from a year ago, maintaining its high rate of expansion and almost 3 times their GDP growth. New passenger vehicle sales in India hit a record high in February, up more than 10% from the same month a year ago. But to be fair, this overall market is nothing like China, or the US for that matter. China's new yuan loans rose 900 billion yuan in February, as was expected. But that gain was slightly less than the 1 trillion yuan gain in February 2025 and much less than the 1.5 trillion gain in February 2024. So it won't be a surprise to know that the prices of most hard commodities are rising. But some ubiquitous ones like plastics, where polyethylene is up 32%, steel, where hot-rolled coil steel is up 13%, aluminium's up 14%, and bitumen's up 35%, have all jumped sharply in 2026. This won't be good for inflation control. The US Treasury 10-year yield is now just on 4.29%, up 1 basis point from Saturday, up 18 basis points for the week. And the price of gold will start today down another $40 from Saturday at $5,018 an ounce, down $138 from a week ago. Silver is down 50 cents at $80.50 an ounce to start today, down $3 from a week ago. American oil prices are up $2 at just under $99 a barrel, while the international Brent price is now just over $103 a barrel. The Straits of Hormuz remain a no-go area for most, although there are reports of LNG ships getting through to India. But the situation is still extremely unstable. One reaction that is not happening is bringing in more US oil rigs into production in the US, even with these higher prices. Not yet anyway. The Kiwi dollar has slid again, down another 30 basis points against the US dollar from Saturday, now just over 57.8 US cents. That's more than a 1 cent drop in a week, down 1.5%. But against the Aussie, we're down 10 basis points at 82.7 Australian cents. We're down 30 basis points against the yen. Against the euro, we're down 10 basis points at 50.6 euro cents. That all means our trade-weighted index starts today down another 20 basis points at just over 61.6 and down 1.3% for the week. And the Bitcoin price starts today at $71,356 and down 0.9% from this time Saturday, although up more than 5% from a week ago. Volatility over the past 24 hours has been low, at just over plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora. I'm David Chaston, and we'll do this again tomorrow.